Good afternoon, everyone. My name is Doug McKay. I'm the founder of Quantum Leap Futures. We're doing this impromptu session because I thought the market's going sideways right now, and I wanted to talk about how we transition from one hypo to the next hypo based on the context of the market. So before we get going, of course, the disclaimer, nobody at Quantum Leap is a certified trading advisor. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please do your own due diligence, your own trade plan, and your own risk metrics. And any trades that you see in Quantum Leap are educational. And if you're interested in checking this out down the line after this, send me an email at quantumleapfutures@gmail.com. So I'm going to bring up, and the first thing I'm going to do is this is our pre-market session. We do these each morning at 8:45 Eastern Time, and we do them live for our members. And then I take the recording and put the recording up on YouTube, my YouTube channel, Quantum Leap Futures. There's probably about 5 years of these videos. So I've already gone through the context. This is about 17 minutes in. I lead up and I do the same routine every morning. And I start with the basics and I work up into my hypotheses. And my hypotheses are my trade plans. Now, because we don't know what the market's going to do, we create multiple trade plans or multiple hypos. And then we wait for the markets to show us who's taking control. And then we execute the plan that best suits the market. And then as the context changes within the market, then we're shifting our focus, okay, to our alternative plans. It's not saying we're going to be willy-nilly about it. We have these plans with specific targets and our trade areas to execute, and then we're waiting to show as the context changes, then we'll shift our thought patterns. And we had a couple shifts this morning in terms of what hypos we were looking at. And I just want to show where the context. So starting with this.
It's a deep box shift, but right now it's at 62.50.
This is the pre-market session and the start of the hypos.
A little bit congested here. All right, so what am I looking for in terms of hypothesis? Well, unfortunately, since it is a wide area of balance we're in, hypo 1 and hypo 2, yet again, going to be equally weighted. But we are finding the buyers right now, and I'm looking for my main hypo as an open auction, in range, in value, just out of value. I'm looking for a move down into testing the low from the prior day session, take out the overnight low. It's somewhere between the 42 and the 49. I'm looking for buyers to step in, rotate us up through the overnight VPOC and continue up and break through the high of the prior day. So I'm looking for a bullish engulfing day and a move back towards this 26.95. I don't think we'll, it's possible we get there today. I don't think we will, but the overall sentiment in hypo 1 is going to be, a move down, find the buyers, and then grind us up through and end up with a bullish engulfing day. That is hypo 1. We have violated the one-time framing down, and so I'm looking for a possibility of a bullishness and a push up into the 2700s again for my longer time frame. That is hypo 1. Hypo 2, again, equally weighted because we are seeing weakness in the overall trend on the larger time frame is starting to show a downward trend on the weekly and the daily. I'm looking for an open auction in range, just out of value, a move up into the overnight VPOC, and somewhere between the 60 area and the 73 area. I'm not looking for the high to get broken. I'm looking for sellers to step in. I'm looking for a rotation down with the main target being down here at the 26.42. Chop in this area and then get a late day probe down into the 33 area, and then find the base here and start moving up and closing somewhere in the 2640 to 2650 area. That is hypo 2. Hypo 3 is going to be a trend day up, a turnaround Tuesday, a open test drive, failure to take out the overnight low, push up into the 75 area fairly quickly, probably within the IB being set, the initial balance, and then find buyers here and continue to push up and come up into the 2695 to 2696 and then go sideways as we fight the 2700s. That is hypo 3. Hypo 4 is a breakdown day, an open test drive or an open drive down, failure to close the naked Deepak and then push through down to the 42 chop here, then push down into the 31 area and then fail and make a new month low and come down towards the October low and the 2600s. That is hypo 4.
Okay, so those are the 4 hypos. Now, it's important to understand that I'm not just trying to cover the bases here and say I'm right. What I'm saying is the context of this webinar is going to be about, well, how do we take that information from our hypotheses, and then how do we find the context of it? So, and then how do we transition from the one hypo to the other? So we had a couple transitions today where we had to shift our hypotheses, okay, back into a different plan. And I want to show how we go about that thought process of shifting and not just jumping all over the place, but actually saying, okay, the market has told me this, and I have all this information. I always talk about the market being like writing a book. First there's a word, then there's a sentence, then there's a paragraph, then there's a chapter, then there's a book and series and whatever. It builds on itself. And so we're watching the open. We don't know at the open what plan is going to be right. We have our biases. In this circumstances, our hypo 1 and our hypo 2, which are 2 main plans, are equally weighted because we're getting mixed signals. And then our hypo 3 and our hypo 4 are our extensions or our trend type scenarios. So we open up and we open the market here at 62.25, and we immediately move up into the 68, 69 area. So right now, okay, we're looking at, okay, it's a possible drive up. So we're waiting to see if we get a shallow pullback, and then we'd be solidly in the possibility of hypo 3. But then we get the sellers stepping in, and we create our opening swing high at the 68.25, and we start moving down through the open. So now we're thinking, okay, the buyers couldn't gain any control. The sellers stepped in, and they're making headway. So we're shifting into, now we're seeing a possible shift to hypo 2. So now I'm off of the long, and I'm looking at shorts, and I actually took the short on the break below the open and through this trade area right here, which is our over underline. Remember that this morning we talked about the fact that 63 would be our over underline for the day. And then I'm shifting into my my hypo 2, which would have been a move lower and down into that 42 area as the main target, as we just watched in the video. Now, then you get strong buyers coming in, and we hold the low, and you get the strong buying up, and then we start chopping here. So now I'm still in hypo 2 because we're just, this could be a normal pullback to the mid and then see the continuation. So I'm still in hypo 2. And then we were saying that if we got back up and held and we had any type of extension above the opening swing high, then I would be back into hypo 1 and possibly hypo 3. Why possibly hypo 3? Well, hypo 1 had us going down a little bit deeper into the 49 to 42 area and creating a bullish engulfing day. Hypo 3 was the failure to close, okay, or get below the 52 and find buyers above the week low we had down here at the 52.50. So they rotate it back up, and then we're still waiting to see if there's a transition. We're still in hypo 2 right now, but then we get the impulse up. We break above the 58.25, and this puts us into possibly hypo 2, back into hypo 1, or possibly into hypo 3. So now we're off the shorts altogether, and then we get this foobar Mr. Sneaky right here. And I'm not going to get into the trade setup, but basically a move with a spike in volume. Here's your relative volume. Is strong delta up, pulls away from the 9 EMA, creates the technical gap, and then we get the opposing force coming in, which is the Mr. Sneaky or the inside bar. It's not a harami. It's a Mr. Sneaky because we're using the wicks and the body, whereas a harami is a body inside of a body. And then we get this rotation down. So this does not violate hypo 1. This is just a natural pullback of an impulse wave of 16.25 points, and then a pullback to the mid and the VWAP. Now, I made a trading error today, and I didn't take this. And the reason I didn't take this is because we had a lot of congestion in this area, and I thought we'd pull back lower and come down to the 62. And if we took the mid long at 66, we really, based on the context of the market, we had to risk all the way down to below the opening swing low of 59.75. So I just didn't think the risk reward was that great. Now, at this point in time, we still have not broken the IB. So yeah, it was a trading error. I should have just taken the damn trade, because that's what we do as traders. And I read too much into it, and that's where you get these scenarios where you get the analysis paralysis, and you're reading too much into the auction. You know that this is a valid mid long. You've got the impulse. You've got a normal pullback to the mid, and a lot to lean against there. So it was a bad trading error. So we get the breakout, and we break the IB. The first break was only for 2 ticks, and it was looking like the breakout, here. It was looking like it could be a failed auction with the move back down, but then we broke out again to 79.25. And then since then, let me just turn off trade the news, sorry. And then now we're just sitting and chopping. So what are we looking at? Well, we've completed hypo 1 in essence. So now we're looking to see if we get another breakout and break this fractal high here, then we're looking for a transition back into hypo 3, and we'd be looking and targeting the extension up into the 95. The longer we hold inside of this range, the less likely we're going to see a trend breakout, and we're likely to come back and test some lower areas. And based on the wide range of values, if we broke below the open again and below the developing value area and this key LVN, so this basically my over underline, then I would be shifting to my alternative hypo. We don't usually talk about them, but my fifth alternative hypo would be a neutral day to a neutral extreme down. And I would shift back into and switch over into that hypo and looking for the extension lower, and this ending up being a bearish engulfing and confirming a continuation down towards the month low, which is down at the 26th, and more likely down to the October low, which is down in the 2600s, and a possible test back into the 2500s. But I can't really shift my my hypo to that alternative, so I've got to stay on the long side right now unless I'm scalping. If I get a setup, we took the short up here. Now I didn't take the foobar Mr. Sneaky. I took it on a break of the Keltner channel on the PNF chart, and we talked about that, and we did that one live in the room at the time. So right now we just have to stay on the long side, and I'll start shifting my hypothesis to my alternative hypothesis once we break below the open and below here. Until then, I'm still looking for opportunities for this to either continue to be in hypo 1 and just start fighting the high from the prior day with the extension up into the 82 to 84, or possibly getting into hypo 3 and getting the extension. Now, the longer we get into the trend, it's still lots of time left in the market. But once we get into the 2:30 and 3 o'clock, if we're still trapped, down here and inside the prior day range, and we don't make a move above the fractal high at 79 and a quarter, then I'm just basically thinking we're going to chop and come into the close, fighting the year open. Just remember that the year open, and this is the hard open, not the adjusted open. I always use the hard open of the year, which was 26.75 and a quarter. And that was the Globex open, not the RTH. So I always, because this is what's going to determine whether or not we have a bearish or a bullish year is, move. And we're now coming into December, so we either get the Santa Claus rally and we end up with a positive year, or the sellers went out and we get some type of liquidation break. Again, nobody can tell you what's going to happen, but this is going to be a battle, and one of the reasons why we're seeing these wide moves right now, as the year is coming to end soon. I forget how many trading days, 24 trading days, I think. It might even be less than that, and and that's it. So anyway, that's what I'm looking at, and this is, we've been doing these pre-market sessions for 5-6 years now, and I always get emails asking, well, it just sounds like you're covering all your ends so you can say you were correct. No, I mean, I don't care if I'm correct or I'm wrong. I care whether or not I'm executing my plan and being able to not get pigeonholed or stubborn and stick to one plan and not be able to leave my mind open, but have specifics that I'm looking at that I can gauge what the context is, and then executing and be able to shift from a hypo 2 to a hypo 1, or or vice versa. Anyway, I just wanted to share with that, and I invited a few people in to see what we do here, and that there's a purpose to doing those pre-markets every morning. And hope you enjoyed it. I'm just going to shut the video down here. This video will be posted up on the YouTube channel as well. And then if you like this, if you want to check out the room, send me an email at quantumleapfutures@gmail.com. I'm not a commercial venture. I'm just a guy that's been giving back. I've been at this game. I started trading in 2007 for futures. So I've been through a few. I've been through a few corrections, and I'm just trying to help give back. Anyway, have a good day. Trade well, trade safe, and we'll catch you on the flip side.